Welcome. Today, we are diving into a topic that's genuinely going to reshape the tax world for pretty much everyone in the UK. We're talking about your digital footprint. Because starting in 2026, every single pound you earn online is about to become a lot more visible to the taxman. This is your essential guide to what's coming, so let's get right into it.
Now, this isn't just our take. We developed this guide with the absolute experts at My Tax Accountant, one of the UK's leading accountancy firms. They are right on the front line of these changes, and their insights are going to give you a crystal clear picture of what's on the horizon and, what it actually means for you.
Think about it. Every sale on Etsy, every ride you give on a sharing app, every single crypto trade, it all creates data. It's like leaving a trail of digital breadcrumbs of your financial life. But the big question, the one you really need to be asking yourself, is who has a new and very keen interest in following that trail?
That's right, HMR Revenue and Customs. They're about to get an automated, real-time feed of your online income data. And look, this isn't some far-off, futuristic thing. These changes start rolling in from January 2026, so you really need to understand what's happening right now.
Okay, so over the next few minutes, here's what we'll cover. We'll look at your growing digital footprint, the massive new rules for side hustles in crypto, the mandatory switch to making tax digital, and we'll finish up with what those infamous HMRC nudge letters actually mean for you.
So what exactly is this digital footprint? Well, it's the trail of all your online earnings. In the past, HMRC kind of had to go looking for it. Soon, thanks to new tech and new laws, that trail is going to light up and become automatically visible to them. Let's make this a bit more real with an example.
Let's meet Alex, a pretty typical freelancer based in London. Now, like so many of us, Alex has a few different income streams going on. A marketing consultancy, selling some digital prints online, a buy-to-let property, and a bit of crypto trading on the side. Every single one of these is about to be reported to HMRC in a totally new, automated way. Let's break down how.
You see, 2026 isn't just another tax year. It really marks the start of a massive shift towards what HMRC is calling tax transparency. It's a big, coordinated move to drag tax reporting into the digital age, and they're using 3 really powerful new data streams to do it.
This roadmap here shows exactly how these changes are going to roll out. The key thing to remember is that the data collection by platforms and crypto exchanges kicks off in January 2026. Then, making tax digital starts in April. Now, this is the really crucial part. By 2027, all of this new data will be landing on HMRC's servers, setting the stage for a whole new level of scrutiny when your first submissions are finally due.
Okay, let's look at the first major change. This one hits anyone with a side hustle, whether you're selling things, freelancing, or renting out a room online. For our case study, Alex, this is going to directly impact their sales of digital prints.
Honestly, this is the simplest way to get your head around it. You know how your bank automatically tells HMRC about any interest you've earned? Well, from 2026, platforms like Etsy, eBay, Uber, and Airbnb will have to do the exact same thing with the income you earn through them. The responsibility is no longer just on you to declare it. The platform itself will be reporting it for you.
And just look at the level of detail here. It's not just some total income figure. These platforms will be sending HMRC your personal details, your bank account info, and a full breakdown of your sales value and volume. This gives them an absolutely crystal clear picture of your activity.
So why is this happening? It's all about the money. HMRC expects that these new platform rules alone will help them bring in an extra $315 million in tax by 2030. This isn't some small initiative. It's a massive effort to close what they see as the tax gap from the gig economy and all those online sales.
Okay, here's a crucial pro tip for you. Open a separate bank account for your business income right now. I mean it. With platforms reporting your bank details straight to HMRC, having a dedicated account creates a clean digital record from the very start, and trust me, it will make your life so much easier under these new rules. All right, so that's data stream number 1. Now for the second, and this one is a truly seismic shift for the self-employed and for landlords. This is making tax digital for income tax. For our friend Alex, this is going to completely transform how they handle tax for both their marketing consultancy and their rental property.
So, what is MTD for income tax? Well, basically, if your total income from self-employment and property is over £50,000 a year, the annual tax return is finished. It's gone. Instead, starting April 2026, you'll be legally required to use specific HMRC-compatible software to keep all your records digitally and send summary updates to HMRC every single quarter.
The difference here is just stark. We're moving from one annual deadline to 5. And that casual once-a-year shoebox full of receipts, that's no longer an option. Your bookkeeping has to be a constant, digital process using mandatory software. This isn't just a new form, it's a complete rethink of how you manage your tax affairs.
Now, I know that sounds daunting, but stay with me, there is a little bit of good news. For the first year, the 2026-27 tax year, there's a soft landing, which means you won't get penalties for submitting those new quarterly updates late. This gives you some breathing room to adapt. But be warned, this grace period does not apply to your final submission or, crucially, to your actual tax payment.
Okay, we've covered side hustles and self-employment. Now for the third major data stream, which is targeting the world of crypto assets. This is the one that will affect Alex's crypto trading, and it's part of a huge global initiative. That's not all. Here's where things get really connected.
This is the Crypto Asset Reporting Framework, or CARF. It's a new global standard designed to close that tax visibility gap in the crypto world. From January 2026, crypto exchanges in over 60 countries, including the UK, will have to report user transaction data directly to the tax authorities.
And this slide shows you just how it works. First, your crypto platform collects your ID and transaction data. Second, they report it directly to HMRC. And third, HMRC automatically shares that data with other tax authorities around the globe. This creates a global information sharing network, making it extremely difficult for any crypto gains to go undeclared.
So HMRC will soon have this absolute flood of new data coming in from platforms, from your MTD software, and from crypto exchanges. What happens when they cross-reference all of this with your tax return and find something doesn't quite match up? This brings us to the sharp end of this new system, the nudge letter.
What is a nudge letter? Well, it's not a formal investigation, at least not at first. You should think of it as a data-driven, automated tap on the shoulder from HMRC. It basically says, hey, we've got information from a third party, like Airbnb or a crypto exchange, that doesn't seem to line up with what you've told us. You might want to double-check your figures.
And this is serious. This is not some casual request you can just ignore. You have a strict 30-day deadline to respond with a formal document called a Certificate of Tax Position, where you either have to confirm your tax affairs are correct or make a full disclosure of any errors you've made. If you ignore this letter, or if you get your response wrong, the consequences are severe. We're talking a full-blown intrusive tax investigation, financial penalties that can be as high as 200% of the tax due, and in really serious cases of deliberate fraud, even criminal prosecution. This is absolutely not something to take lightly.
The crucial point to take away from all this is simple. The world of tax is changing permanently. The days of HMRC not knowing about those smaller or alternative income streams, they're over. Automatic, data-driven reporting is the new reality, and preparation isn't just a good idea, it's absolutely essential. And this brings us to the key takeaway, which is summed up perfectly here by the experts at My Tax Accountant. You just cannot afford to ignore these changes. Being proactive, getting your records in order, understanding your new obligations, and seeking advice now is the single best thing you can possibly do to protect yourself.
So this is the question you really need to ask yourself. From 2026, your digital financial life effectively becomes an open book to the tax man. So the final question is, are you confident that the story it tells is accurate, and is it complete? If any part of this applies to you, the best possible step you can take is to get professional advice. The team at My Tax Accountant are genuine experts in this new digital tax landscape. You can contact them on 0208-570-8531 or at info@mytaxaccountant.co.uk for help with your digital footprint and any other tax issues you might have.
And for more guides on essential tax updates just like this one, make sure you subscribe to the channel. Your future self will definitely thank you for it.
And finally, just a quick disclaimer. This information is for general guidance only. Tax is complex and it's personal to your circumstances. So before you make any decisions, you must consult a qualified expert like the team at My Tax Accountant. Thank you for watching.